Hey folks, how's it going out there? Hope everyone's having a good trading day so far. And a good trading week for that matter. It is Taco Tuesday for all those who celebrate this momentous holiday. I'm trying to lighten the mood a little bit because it's been pretty heavy. There's been some crazy stuff that's been going on around the world, let's be real. I'm sure it's been weighing on a lot of people's minds. And it certainly had a role to play in some of what we saw yesterday as well. We definitely saw it playing a role in the way markets were pricing yesterday. Going into yesterday, we had a pretty deep sort of overnight sell, and we had this big spike in crude and pretty decent sized jump in gold as well. All that made sense as sort of geopolitical hedges come on. You've got folks piling into long bonds, buying the dollar as well. There was also some technical reasons for that type of development to occur. So we're going to dive into a lot today. We're going to talk about S&P, NASDAQ, bonds, gold, and oil. We're also going to be looking at those live on Bookmap during the trading day, watching how the liquidity is moving the market. So let's start diving in. Glad to have you all with me. If you enjoy my streams, feel free to hit the like button, share it with your friends. So first and foremost, I'm Markets and Mayhem. I'm sure you've heard of me. If you haven't, I'd like to introduce myself really quickly. I'm an experienced trader and investor. I started in 2005, really navigated through the great financial crisis, trading my own money on my own account. It was, let's just say, trial by fire type of experience. You never really see the whole world fall apart before your eyes like that. And I got to learn a lot about the financial system, about the economy, about the plumbing that kind of holds everything together. And it also gave me a little bit more appreciation for more than just the charts, right? I was always a technical driven trader, but then I started to learn more about the other elements, intermarket dynamics, sentiment flows and positioning, economics, and how they can impact the broader picture. And it doesn't happen instantly. You know, you get a piece of economic data, it doesn't mean within 5 minutes the market's going to price it, but it can have a broader impact over time. Trends can form. So I'm really interested in looking at the market from a number of different vantage points and then trying to find those ideas of coalescence or confluence, right? Where there's multiple different indications that something may be presenting itself as an opportunity, as a longer term trend, or even as an intraday opportunity. And so if you want to find out a little bit more about me, I'm a co-founder of Traderade and Macrovisor. Traderade is all about short-term trading. If you're interested in Traderade and what we're doing over there, you can get a 30% discount with the code Bookmap30 at checkout for your first month of Traderade Plus. You can also check out macrovisor.com, where we make macro actionable. If you're a longer-term investor and you're interested in how the big picture distills into market trends and opportunities over longer time horizons, that's what we're all about at Macrovisor. And you can find my YouTube, where I post educational content about trading, about the bigger picture. That's youtube.com/@mayhem4markets or mayhem4markets. And also, Bookmap has this really awesome offer. It's about up to 40% off. Go to traderade.com/bookmap, traderade.com/bookmap, and it will load a page on the bottom under the special offers section. You can see those discounts. Now let's get through the legalese, the disclaimers. Everyone's favorite part of my presentation. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I think we all know that's the case. My general advice, be careful out there. That's it. Just be careful out there. This is not the type of environment where things are very certain. And so this is my whole theme here, really coalescence as a compass. It's what I've been talking about in these Bookmap presentations for some time. I think it's a really important idea to consider if you're a trader and you're looking to improve probabilities, to have better outcomes. What do you want to do? You want to put the odds on your side, right? The more that you can see different elements in the market, those puzzle pieces being put together that help you put the odds in your favor, the better off you might be. It also might keep you out of trouble. If you have situations where you can't put these pieces of the puzzle together, you can't see that potential confluence or coalescence, then guess what? Maybe it'll save you from a bad trade. Maybe it'll help you become more disciplined. Trading successfully over long periods of time is a marathon, and it is all about discipline. I wrote a great free article on Traderade about what trading is really about. If you're newer to this game or you're just not having much luck, check out our website, check out the free article. It's got a lot of information for people that are newer to trading. I think that everyone should consistently reevaluate and iteratively improve their trading systems, because no strategy is going to work forever. You're going to have to fine tune. You're going to have to adjust as market regimes change. We have to be aware of those dynamics. So that's another thing I always like to tell traders is keep your mind open, because you're never going to be 100% perfect. You're always going to have room to improve. The other thing is have reasonable expectations. Some folks out there say they have a 90% win rate. I'd love to see that. The best traders in the world are typically about 60%. Realistically, you can't get to those crazy win rates that some people are saying, oh, I never lose a trade. Oh, it's all lottos and Lambos. Be careful with that. Those folks are going to mislead you. The reality is look for holding on to those winners, cutting losers rapidly, and even a 40 or 50% win rate can be immensely profitable. I know it doesn't sound like it because you're doing the math and you're like, but that's not as, that's like basically a coin toss. Yeah, but if your winners are 30, 40, 50% and your losers are like 8 to 10%, that math adds up. And that's exactly what we should be looking to do. Rather than setting unrealistic expectations and then failing at them and feeling bad because no one can trade that way, set realistic expectations, take notes about how you're trading, keep a journal so you can go back and review what's working and what's not working. And remember one key thing to everyone out there, there is no one size fits all trading system. You have to figure out what works with your personality. So let's look at some of these key gamma levels in the S&P 500. We all know about 4,200, right? That was such a big level last week. And we basically touched it just about the moving average. The 200-day was just right below there as well. And we got a healthy pop, and it looked like there was some decent risk appetite coming in around there. So that puts us into a situation going into today where we are now. We're really looking at this 4350 level on the right chart here of the gamma exposure right above us as a potential area of resistance. And then right below us, of course, we have 4300 as a reasonably chunky area. So we kind of have this range we can bounce in. Wouldn't be too surprised if we kind of get caught in this range. Maybe it'll be a little bit of a bigger range up to 4,400 as we get into options expiration for this month, which is happening not this Friday, not this lucky Friday the 13th with big bank earnings season starting, but next Friday. Okay, so just keep that in mind. These gamma profiles are helpful in the sense that it's one of the forces that has a big role in pushing the markets around, these longer term options positions. The other part is, of course, the 0 DTEs. And when we get into the live stream, I'll show you a little bit more about how those are interacting based on the tool that I've created. Now, we're also still in negative gamma territory. Right here is really our flip level. That's going to be 4392. So you could basically call it 4,400. We know there's a huge amount of positioning above us there. Now, this is the most important thing to understand about negative gamma. If you're not super familiar with positive and negative gamma, this is the primer. Negative gamma leads us to an environment where dealers are more likely, they don't have to, but they're more likely, depending on their positioning, to hedge in a way where they are buying rips and selling dips. And so if you think about that, that adds to volatility. It adds to total price range. When you get in a positive gamma environment, you have the opposite, right? You have basically dips being bought, rips being sold, and that makes it more likely that you have a lower volatility regime. And so that's something to take into consideration in the environment we're in right now, because we could be getting closer to that positive gamma regime. Now, there's also statistical correlations with these. When you're in a negative gamma environment, you do have a risk of larger moves in the VIX and you have more likelihood of downward moves in the S&P, just statistically speaking. And when you get into positive gamma territory, those larger moves in the VIX, particularly to the upside, that possibility is reduced, and you generally have more constructive price action. So that's just something to keep in mind if we're looking at statistics and correlations and kind of going back in time on this stuff. That's one of the things that I keep coming back to. And we were very, very deep in negative gamma last week. That was one of the reasons that things got pretty darn hectic on the volatility side. So just keeping an eye on that 4,400 level, it's not just important because of gamma exposure, it's also important because that's going to be the flip. So let's look at some of these key levels in the S&P 500 for us to watch. The delta between the S&P 500 cash index and the S&P 500 E-minis futures contract is about 33 points. So you can screenshot this and save it for later. These levels are probably going to remain pretty similar throughout the week here. But really, it's just as we talked about. We're looking at that gamma level of about 43.50 as a potential area of resistance as we get into the trading day today. That's not too far above us. If we're able to break above that, I think that does open up some additional potential upside. We've got 43.75 and 4400 to watch, and we're just basing that on options positioning. But I wanted to have those levels available. The main one, again, we're going to be watching today, though, is that 43.50 level. I think that's going to be more important. If we're able to push above that, I think buyers gain a pretty significant advantage to keep pushing price. Now, let's look at some of the other dynamics going into today. This is our retail sentiment. It's really AAII bears versus bulls, or bulls versus bears. It's the ratio. And we can see this has come down a lot this year, right? This is the peak euphoria we had in 2023 over the summer, where the idea was the market's going to go to infinity. There's 7 stocks that'll lead us to S&P 6,000, yada, yada. I'm being a little facetious, but that was sort of the mantra. When you see this type of euphoria, it's generally a good time to de-risk. Okay, and certainly that ended up being the case. And it's an extreme, right? If everyone's loaded the boat with stocks and they're all long, who's left to buy? And that's sort of what you see in that kind of blowout reading. Well, now we have a bit of the opposite. It's not a washout. Like, look at the lows that we saw during the banking crisis. That was fear, right? That was real fear and a real washout. We're not quite there yet. This is closer to sort of angst, just below neutrality maybe. It still tells us there's room for retail to become marginal buyers. Folks like us, have been kind of sitting on the sidelines or even doing a bit of de-risking over the last couple months. There is room for folks to come back in and buy on the margins in areas of the market they find attractive. Now, well, let's look at the professionals. They had a similar blowout. Look at this. They were leveraged up here. This is also in the summer. So it wasn't just us. It wasn't just the retail folks that were out there feeling really good in July. It was actually the institutions as well that were getting pretty darn bulled up there, and they were putting on long leverage. So anytime you go over 100 on the NAAIM reading, that means they're actually not just getting long, but adding to leverage longs, right? And then we saw, again, the same thing like we saw with retail, except for this is positioning. We saw that big washout. And now we're at a level that is close to the lowest levels of 2023. That lowest level was actually reached by professionals in August, not during the banking crisis, but actually recently. So to me, this is more important than what we're seeing in retail sentiment. This shows us that there's been a pretty big de-risking by professionals, and they're able to buy. They have buying power now. They have also not a high amount of hedges, but they have some hedges on. We'll take a look at that in the form of skew on this next chart. Here is skew on the S&P 500. And again, similar theme here, but basically you have a reduction in hedging activity as positioning has come down in particular. Like we see from August, where there was a very big boost in skew going into September's OPEX and August's OPEX. We saw that drop really significantly. We had another shoot up again, like I was saying, towards September's OPEX. But now we see this, I would say, really just a lack of hedging. And that makes sense because you've got positioning coming down pretty significantly. So what is there to hedge? And then in terms of momentum here, we're about flat, okay? This is the Nicey-McClellan oscillator. It looks at breadth, it looks at momentum, and it's telling us we're just starting to push into positive territory. We did get pretty oversold not too long ago. The recent selling didn't bring us to oversold levels on a weekly basis, but it did on a daily basis, and we're pushing up into positive territory. Typically, when you see breadth and momentum push into positive territory, there's some degree of continuation. It doesn't always happen. We can see there's some occasions where, it didn't go very far, but most of the time it does. I mean, look at all the times where it really did move far. So that just tells us that there's a shift underneath the surface, that breadth is turning more positive, that more issues are getting a bid, and that can be constructive, particularly given the technical environment that we're seeing. We also have at the margin these CTAs, momentum-driven traders. They de-risked and then got super short between September and into early October. Now there's no more selling to do based on this model from Goldman Sachs. If anything, there's a lot of buying to do. At the margins, these guys could become buyers of about $80 billion of S&P futures exposure over the next several weeks, which is interesting because it also coincides with a time where seasonality is actually more constructive for the market. From about mid-October on, it's generally that we get a bid through the end of the year. Volatility tends to crest and fall, and markets tend to move higher. Now, that's just seasonality. That's just looking at data and coming up with what often happens. It doesn't mean that's what will happen. It just means based on analysis of prior trends over, the last 20 and 50-year periods, October, really mid-October on, tends to be a pretty constructive time for the market. And everyone's heard of the Santa rally and all that. The other caveat, however, that I will add here is that we are in a buyback blackout ahead of Q3 earnings. That can reduce some of the bid for the market. And we're also in the end of the year for mutual funds who basically, if they have losers, they might do that tax loss harvesting in October, right? So that's just a couple things to consider as we navigate into next week with OPEX and some of the flows that will change in that time period. So let's take a look at the S&P 500. This is pretty interesting where we are right now. We're sort of bumping our head up into a key area that I think could be chunky resistance. We're just testing this 20-day moving average as well. So this is what is going to be my area that I watch for a pivot today if I want to get long into continuation. It's going to be moving above that 20-day moving average in this area of price action resistance. We can see with MACD, we're starting to get a little bit of positive momentum. That's a decent initial sign. We did test this trend line. We had a pretty good little break below, but markets wanted to push back above. That's also constructive. The bulls are back in control of the intermediate term price action. That's what this is telling me here. And I think that's what we have to watch going into today to see if we get that continuation. So zooming into an hourly chart, this is the area of resistance that I've been watching pre-market. And, as we trade, we look like we're actually going to be pushing above that area as we open here in about 12 minutes. But that's going to be the pivot that I really watch for. This and the opening range is going to give me a better idea. Is today going to be a continuation of that Monday, Friday rally dynamic? It's very common that a rally that starts on Friday continues through Monday, but what happens on Tuesday is much more important for the trend. Okay, so if we look at just previous statistics, when there's a good sell-off on Friday, there's also generally a continuation of selling into Monday. It's a sort of Friday-Monday flow. So just something to take into consideration as we're trading today. For me, I'm going to be looking at opening and pushing above, building volume above this pivot to qualify as basically an area to start adding to longs intraday. If we're not able to hold here and we reject meaningfully and we start to pull lower, I'm going to be looking at this trend line here. This is the same trend line from the prior chart. It's also a pretty chunky area of the hourly volume node. That would be an area that I would look at shorting into for a bounce, right? So we're going to be looking at where we are at the open and just after to get a sense as to if we have continuation or rejection and consolidation. Next up, we have the NASDAQ. The NASDAQ looks pretty constructive here too. It tested that uptrend line from October. And it is back above. It's also looking more constructive than the S&P 500 in that it is above its 20-day moving average. So the NASDAQ, has been the leader this entire year. And it's showing that leadership quality once again as it pulls up above the trend line, up above the 20-day, and is just balancing below that volume-weighted Ishimoku cloud and this point of control that you can see on the chart, the biggest area of that volume. This is going to be a bit of a magnet here. We've got so much positioning here between buyers and sellers. I wouldn't be surprised if there's a little bit of fighting around this level. But whoever does push this either above or below that point of control, or if we get that rejection at the cloud and below the trend line, I think that's going to determine where we move next on an intermediate period. Today, I think will be more of that tug of war. And so we're going to be looking at NASDAQ and S&P to get an idea of where momentum is and what type of trades might line up. But if you're a longer term trader and you're watching this, it's a little early to get too bulled up. We still haven't seen what I would say is a thorough, proper bottom here. I'd really like to see this push up above the cloud and really close more thoroughly above this point of control to say that the bulls are back in control 100%. But buyers do enjoy an advantage here versus sellers. Let's look at the bond market, because who isn't talking about the bond market? We've had the worst bear market in U.S. bonds in history over the last 2.5 years, and it's a pretty big deal when we're talking about long duration risk like the NASDAQ or the so-called Magnificent Seven, or really any of these growth or techie or other areas, particularly the ones that are more rate sensitive where they don't make any money. What are we seeing on this chart? Well, for one, it looks like we found a little bit of support. This is a pretty important level. This is a point of control that goes all the way back 20 years of price action. Why is that important? Because this is a place where people like to buy ZB, which is the 30-year futures contract for that bond. So this is an important area to watch very closely, because if we do get a decent bounce here, we can actually move pretty appreciably higher. Right? I still think it's in the context of a broader downtrend, and I'm not so sure that that downtrend has changed in any meaningful way. But what it does tell us is if we get that sigh of relief, that breather and counter trend bounce, it could be bullish for equities, could be bearish for dollars, could be great for gold. So there's some opportunities to key off the long end here as it might consolidate and move a little bit lower just on some of the technicals being exhausted, and on this huge, absolutely multi-decade level of potential support that is worth watching. Let's get into crude oil. It bounced at a level that I thought was pretty important. This is something that I shared on the Traderade Discord, talking about this trend line is super important to watch. It is a level where we've had a lot of contact in the past, and we just see it as validated because of that. And so once again, it's validated, right? We have a pretty big low volume node that we're chopping in right now. So this is going to be a key area of decision for crude. It really does need to push a little bit higher to show that the uptrend is solid and intact. We did get rejected at that 20-day moving average yesterday. So we still have a position here that buyers are in control, but they're not fully in control. I'd like to see this push above the 20-day and push above this high volume node to really demonstrate that. For now, I still think it pays to be constructive on crude from a long-term trend basis, and some of the energy companies that are in that space have had such a nice pullback. There's some very attractive opportunities there. But in terms of the oil itself, I'm going to watch and see how it trades today. I don't have a strong bias intraday for this thing. I think longer term, it's very much in an uptrend, but intraday, it could consolidate some of those geopolitical tension-driven gains that we saw. And here's gold, and gold seems to be trying to put in a bottom here, but this is one of those areas of the market that it really burns a lot of people on both sides, right? Gold is a great vehicle to lose money in. Let's be honest. And I'm just saying it because, there's a lot of times where there's technical or, macro catalysts for gold, and it just does not behave the way that people would expect. I will give gold credit where it's due. The resilience that it has experienced this year is impressive, right? This is a year where rates were soaring, the dollar was rising for a bunch of the back half of this year so far, and gold's been relatively resilient with all of that going on. So, got to give props where they're due in that sense. On the other side of it, however, we did manage to bump across this pretty key area of resistance here. We are consolidating from there. We're below the 20. We are still in a downtrend of, we've made these sort of series of lower highs, and now we've made a pretty meaningful lower low. So I would say that we're not out of the woods. Gold has not necessarily shown us anything resembling a reversal. In order for it to do that, I'd like to see it push above the 20-day and above this other area of resistance that it's formed with touches in the past, because that's going to probably start to pull us right back into that point of control. Typically when you start to see a push towards a magnetic area of the volume profile like that, you'll get some continuation, and that would also likely push a lot of these sellers out to cover their shorts, adding to that upside momentum. The prior chart, looking at that 30-year bond, gives us a little bit more of a sense that maybe, just maybe, gold will have that bid because rates on the long end are coming down. So summing it all up, bulls are right now enjoying a technical advantage overall. They're not fully in control, but they're in better shape than the bears are. NASDAQ and S&P are really looking like the strongest of the two indices. The Dow and the Russell seem like they've really gotten beaten down, and they really haven't enjoyed the advantage that the S&P and the NASDAQ have, being so options-driven, particularly the S&P, and also the concentration of that Magnificent Seven, who are still the market leadership. I think they're a little bit overbid here. I think we're due for a rotation, but that's not a subject for today. That S&P 4350 level, I think, will be pretty important. Pre-market cash, we're just under that by about 10 points. Rates seem to be taking a breather. We do have a 3-year note auction today. Our results will be in just after 1 p.m. Eastern. And we'll have a 10-year tomorrow. And then we'll have a 30-year. So we've got a pretty good amount of different auctions happening this week. We do have CPI happening this week as well. That's going to be tomorrow, with PPI on Friday, as I recall. And so we do have, PPI is going to be tomorrow and CPI is going to be the next day. So they've reversed things this week, which is always interesting. But nevertheless, I think that PPI with 10-year auction tomorrow and CPI with the 30-year auction on Thursday will be very interesting events to watch. Both the reaction to rates, after the event, and then how well the auctions do. That's going to give us a sense as to what markets are thinking about inflation. Just like today's 3-year auction will give us a better sense about what markets are thinking regarding the Fed's resolve and any potential future rate hikes. We had Daly and another Fed speaker come out and basically say the long end is doing some of the Fed's work for them. Maybe they don't have to hike again. We'll see. I wouldn't consider that necessarily universally dovish, though. It's basically the Fed saying, well, maybe the bond market will do our work for us. If it does, effectively the same thing has happened. There's further tightening of financial conditions. And the dynamic that we're seeing right now, if bonds have been exhaustively sold off, if the dollars have this really powerful rally that it needs to consolidate from, maybe retrace a bit, that could be supportive for markets. It could help to give gold a bid as well. We've looked at it potentially leveling out. Oil seems to be consolidating, as we discussed, after these geopolitical events and that big surge in price we had yesterday. Doesn't mean that that upside is over in oil, but I think it has a little bit of digesting to do afterwards. So today I'll be watching the 20 and 30-minute opening range for NASDAQ, S&P, crude oil, bonds. We're going to look at the 10 years and how they're trading, and we'll also look at gold. And then finally, just as a broader note, we discussed seasonality supports the market beginning to move higher from here. So we are just about less than 2 minutes away from the market open. So I'm going to switch up to my Bookmap stream here. Give me 1 second on the Discord so I can pop that screen for y'all. And I'm also going to just put these indicators up on the YouTube stream. These are the market pulse indicators. So that should show you kind of another area of how pressure is forming in the S&P and NASDAQ based on volume. So we are just here right before the open. We're going to zoom in a little bit on the NASDAQ and the S&P to really get a good sense of the price action as we do open. And folks, if you have any questions out there, feel free to pop them in the YouTube chat or on the Discord. If you're on the Discord, just make sure to tag me in so I know to get a notification for your message, because I've always got a lot of screens going. I'm not always able to pay attention to all of them at the same time. Less than a minute from the open here. You're welcome. Thanks for tuning in. It's always fun doing this stream, and enjoy all the support. Here we are, the bell's just about to ring. We could see some resting liquidity above us right here, but not enough to really get my attention. We have the most active call level from yesterday printed on the chart. And here's that opening bell. Let's take a look at the NASDAQ too. NASDAQ's getting a nice bid off the open here. Bonds have a little bit of a bid off the open here. They were closed. The bond market was closed yesterday outside of futures. And crude is got a bid pre-market, but at the open, it's actually seeing some selling here. And look at that. S&P didn't catch a bid for too long at the open here, now retracing. Thank you, Carl. Appreciate that. We do see a little bit of institutional nibbling. We could see the iceberg starting to build just a little bit, but not enough to really catch my attention. We'll move back over to the NASDAQ here. Pretty choppy range there as well. We can see the point of control. We're pushing below that, the white line being the VWAP. We're also testing that now. Now sellers have actually managed to pull that point of control a bit lower. And we can see that sort of bracket of liquidity around the NASDAQ shifting around. This is pretty interesting here. This is the sort of opening chop that one can expect. Some of it's a continuation of the order flow we had in like the last 15 minutes of the prior day before close. S&P kind of following that theme of the NASDAQ there, this sort of very choppy open. We did not see S&P sellers put enough volume through to push this or pull this point of control lower. And now we're starting to push above it here. And like the NASDAQ, just some tepid accumulation by institutions with these icebergs rising. Nothing too noteworthy, however, of yet. Pretty choppy overall. And remember, one of the things that is a theme here is that we have lower liquidity dynamic. The order book is a little bit thinner on the depth than what we had seen earlier in this month and later in September. And what does that tell us? It tells us that it takes less volume to move price more. It also tells us that you're going to have this sort of erratic price action at times. And that's exactly what we're seeing here. Just a little bit more. It's not extreme by any stretch of the imagination, but it's just a little bit more choppy. NASDAQ, S&P enjoying a pretty similar look, trying to figure out what they want to do. Again, we're watching that 20 and 30-minute opening range for a better sign as to what kind of trend may develop. Let's also just pull back here. We can see what resting liquidity looks like. There is some resting liquidity building below in the NASDAQ, but not enough to get my attention. In the S&P, pretty similar picture. There's nothing really big near price here. We've got this level just above this 303. I would not be too surprised if that gets filled. That's so close to price. We've also got that 348 below. So we're starting to see more of these resting offers and bids, respectively, coming on the book. A lot of the news flow right now is geopolitical in nature. We also have a ton of Fed speakers this week. This is like a reality show that just never ends with the Fed speakers. Pushing closer to that resting offer on S&P around 43.80 here. Little bit of institutional distribution on the icebergs, falling a bit. NASDAQ continues to be choppy as well, not really showing us any signs of leadership this morning. I often like to look at it because it tends to be the sort of high beta momentum leader often pulling the S&P around, although yesterday that was not the case. Maybe a little continuation of that theme today, where it's a little bit more, I would say, indecisive. We do see stops getting blown out here. That little stop run that we had in the NASDAQ did take some of the smaller traders out of that. It's really interesting to watch the stops and the icebergs. I think it's one of the most valuable components that Bookmap provides, because it gives you a better sense as to some of this order flow that's coming through from larger players. And it's all coming through rhythmic, and then the stops and icebergs plugin. So you can put that on the active chart, you can put it on the sub chart. For me, it's been a game changer, because when you see really big gaps, like if this was a situation where stops were getting blown out and institutions were buying that blowout aggressively, that would make me more interested in accumulating around key levels. We don't see that yet. We don't see anything quite resembling that yet. But that's one of the reasons that I could get excited about that. Because if you think about it, if small traders are getting blown out of their speculative positions and large traders are buying that and doing it aggressively, so in the, you know, in the amounts of thousands of contracts, that would have me more interested in wanting to take a long. Another thing that we saw going into the close yesterday was some large institutional player, like I think 15, 20 minutes before the close, bought 2,500 ES contracts. And that put a bottom in right there. Not that yesterday was a big sell, but that stopped any kind of distribution into the close, because who wants to go against that? Who wants to challenge someone who's willing to that aggressively buy the dip? We do see some selling pressure coming in. We see actually now there is some iceberg buying in the NASDAQ, and there is broader distribution from those smaller players getting stopped out. We have broken this sort of 5-minute opening range to the downside. So if you're a higher frequency scalper, this is an opportunity to look at kind of riding that continuation. But what would give me a little bit of pause is that institutional players were buying basically the contracts that the long specs were being pushed out of. Let's move over to the S&P. It's a bit of a different picture here, a little more muted. We did not see a breakdown of the opening range, but we do see resting liquidity building below us, just around the same level that the most active call strike was yesterday. Shift over here to bonds. Pretty boring. Not much going on here in bond land. We are below the VWAP and point of control, and we did see a decent size iceberg buy, but did not necessarily push price higher for long. In crude, it is continuing to consolidate. That big sell that we had kind of going into the open has led to further pressure. And that's a good thing for rates. It's a good thing for stocks, unless you're in energy. But I don't think it's necessarily over yet. There's still people that are coming in and accumulating this contract. S&P now pushing above VWAP and the point of control. We do have that resting liquidity just above us here. We saw that bid. It just got pulled out. We were just talking about it at 436. It's gone. And now we have that offer starting to grow a little bit above us. 390 at 43.80. Would not be terribly surprising to see that taken out. If we did, then we'd start to push through that opening range to the upside on S&P. Let's look at NASDAQ. NASDAQ looks less decisive and less constructive than the S&P here. It is now testing the point of control, breaking below it, now testing VWAP. We do see more accumulation from institutions. Icebergs continue to build. You can see another order there, another 221. Someone likes that number. They've ordered that many contracts twice. Very choppy trading in the NASDAQ. You do see a little bit more of that dichotomy between small specs getting pushed out and larger institutions buying. That's the negative stops and positive icebergs. You can see that sort of expanding. I would want to see it as a broader divergence, but This is at least telling us institutions are buying the contracts that the small specs are being pushed out of. Now, this is one of those weeks where I would keep an open mind on both sides of the trade. You can't necessarily get a very strong bias. There's a lot of moving parts here. We've got, PPI, CPI, bond auctions, geopolitical event risk, Fed minutes, UOM consumer sentiment. There's a lot of different moving parts behind the scenes that can change things at a moment's notice. So for me, I'm navigating this market with smaller position sizes, shorter time frames for my day trades, because I just don't want to have that risk on for very long when things are moving so fast. And you can see why this is a difficult market right now to really get any kind of high frequency scalps, anything that's a longer term intraday trade. It's just not looking like it's set up quite yet. We're just trying to figure out if the market's going to give us any real clear sense of trend. This is starting to look like a bit of a sell down here, though. In S&P now, we're making a 10-minute opening range break down. Again, I like to look at the 15, the 20, and the 30 a little more, especially the 20 and 30, but this is still serious. This is, you see these folks getting stopped out. Institutions are not coming in to scoop up these shares, and you do have more liquidity coming in below. Let's see what the Nasdaq's doing. It's not confirming that. It's actually put in a bit of a higher low here and testing VWAP from below. So interesting. The Nasdaq was the loser earlier. Now it's the S&P. We see rates beginning to move higher as bonds are seeing some distribution here, and there is a large number of resting bids appearing in this 10-year note futures contract lower from here. And that's something that's worth paying attention to, because if rates do begin to become under pressure again, they start to move higher again, that could put more negative pressure on equities. Oil starting to firm up just a little bit, maybe putting in a short-term bottom here as it pushes up above the point of control and tests that VWAP level. We'll have to keep an eye on that one, though. It's pretty shaky. And folks, if you have questions out there about what you're seeing on the screen, what I'm talking about, the items that I discussed in the presentation earlier, please feel free to post them in the YouTube chat or post them on the Bookmap Discord and just tag me in. Let me know what you're thinking, what's on your mind. If you have any feedback for me about the presentation, things I'm doing well or could do better, always open to that as well. And just want to thank you all for tuning in. If you enjoy this, hit that like button. And check out my work on my YouTube and my Twitter as well. I put a lot of great information out that I think benefits people of multiple different time frames and backgrounds and disciplines. Really, if you're in the market, having more information that is signal rather than noise is important. And I think looking at the big picture and then zooming down to these micro details like we're doing right now is also pretty helpful, just to understand the different moving pieces of the puzzle. So we are just sort of chopping along that pivot level that I had identified in the pre-market session. I haven't really seen the decisive break above it yet. I think if we're able to push above that really, that large resting offer around 43.80, that's going to have me more interested in looking at taking a long. But I would love to see it push above there, build some volume, and then start to continue moving higher. That would have me confident wanting to take an intraday long, particularly as it would start to make it look like we're experiencing a positive trend day. We're not quite there yet. Discipline pays in this game. Not taking trades that don't line up with your thesis or your system is very important. As some say, some of the best trades you'll ever make are the ones you don't take. Let's go over to our friend, the NASDAQ here, the high beta beast, and it is starting to really break out here. This is looking at least a little more encouraging. Let's keep an eye. It did make a new high post-open, and it's continuing that volatile chop. If it can touch down on this point of control VWAP level and then push above and make a new high, that's going to look really constructive for intraday momentum. Someone's buying a little bit of the bonds here. I just got an alert from the bot that I have doing audio alerts. Could probably turn that on for y'all. Just put that on in the background so those alerts come through for you all as well. There we go. I'm just going to pop on a scanner, just take a look at what's going on in the world options here. Bear with me one moment. Some bullishness in SPY calls, got about $500,000 of premium flowing into those looking for 435, 436 on SPY for this. Actually, yeah, for this today, there's 0 DTEs that they're putting that $500,000 premium into. Also have someone buying 180 strike IWMs at $280,000 of premium there. So pretty serious bullishness. And then, of course, to be expected, you've got Lockheed Martin getting a pretty decent bid on the call side. With geopolitical tensions rising, it makes sense that you would see a bit of that. That was 174,000 going into LMT for the 445 strike. Let's go back to the S&P 500. We are now pushing higher here. We're close to the highs of the day. Again, looking at that 4380 as kind of a line in the sand. I think if we can push above that and build volume, it's going to look constructive for a bid. See how the NASDAQ's doing. Still consolidating. It did make a new post-open high, but it's pulled back. It did hit the VWAP and point of control like I was talking about. Now we really want to see that push higher. So it's like putting in a higher high, higher low, and then higher high. That's going to tell me that it's really ready to start moving here. And we're getting closer to that point where we'll start to define that 20-minute opening range. It's about 2.5 minutes out. Going back to S&P. Just sort of consolidating. Again, nothing terribly exciting yet. Just saw a Tesla call for 101,000 premium at the 265 strike. The options premium flows are relatively bullish overall so far today. The put side is a lower amount of overall volume and premium paid. Coming back on S&P, testing this point of control and VWAP. Point of control moving just a point higher here as volume starts to build around this level, this 43.75. We've got about 11 minutes left for my stream. I know we haven't had anything terribly exciting happen in these markets, but hopefully I've at least left you with some ideas as to how this day could trade.
Trade CNC3C bot at Rhythmic Cell 500.
I'm going to be really
Trade
looking at this
CNC3C
20-minute
bot
opening
at
range.
Rhythmic Cell 813.
And that's my little bot.
CNC3C bot at Rhythmic Cell 336.
Looks like we got some selling going on in bonds. That's what it's alerting us to here. And we do. Look at this. You see the 10-year getting some distribution. You see liquidity building lower. There's that large resting bid at 107.090. And that could pull rates a little bit higher here. So that's something to watch. That's why I have those alerts, because I'm not able to watch all the charts at the same time. So if the bot can kind of tap me on the shoulder and say, hey, there's something interesting going on over here, I'll look at that chart. We did have, though, this large iceberg. Look at that, 2,000 on a buy side for these 10-year note futures. So it's not exactly a clear set down downward move here, right? You've got institutions that are continuing to accumulate into weakness. And the crude contract continues to roll over. Now we're actually below the point of control, and VWAP wasn't able to defend that level. And it's pretty choppy in terms of where the liquidity is coming in and leaving on this one. Yeah, getting another push here. This is getting a little more interesting. This is a new high for the morning. Let's see if we can push above that 43.80 level and get a real move by these buyers that shows us they're determined. We want to push above there, build some volume, really start to see this point of control get pulled upward. And that would have me wanting to take an intraday long on the basis that maybe we're really going to have a trend day. I would feel a lot more comfortable if rates were moving lower, but you know, we have the market that we have in front of us. And folks, I hope you've enjoyed this stream. If you do like what you're seeing on screen, if you enjoy this type of content, this sort of trading oriented, multiple time frame, multi-asset class content, I work on 2 different services providing this, both free and paid. There's a lot of free content on both these services, so don't think this is just a pitch for paid. You can check out the free. If you like it, you can consider upgrading. Check out Traderade.com and macrovisor.com. On Traderade, we've got a limited time offer, 30% off on Traderade Plus monthly plan with the code Bookmap30. You can go to Traderade.com/bookmap. That's Traderade.com/bookmap, and also get up to 40% off the Bookmap software. If you're interested in that, just scroll down to the specials. And then at Macrovisor, you're welcome to sign up. We've got all kinds of longer term oriented content, really cross asset class strategy, macro driven thematic trading, some pretty cool stuff. And remember, on both sites, there's free content too, so you can kind of get a feel for what we're doing before you commit. I see my stream got kind of pulled asunder here, so I'm just going to straighten that out here on OBS. Sorry about that, folks. And if you see these gamma levels on the chart for S&P, this is actually a tool that I built. And we're starting to see these calls come in quite a bit higher. 7,000 calls, what would be equivalent to about ES 4460. And we've got these puts. There's a pretty big difference of opinion here. They're coming in quite a bit lower, around 4325 on ES. These are levels that are dynamically converted from SPX to ES by looking at the prior day's close and doing a delta calculation automatically. We've got this key gamma level just above us here. This is likely to be a bit of resistance. It's right above that area of resting liquidity at 4480, and we are testing those levels, so it's starting to get a little more interesting here. You do see a little bit of institutional distribution here, not a lot, just a little. You see some stops getting blown out to the upside, and we see this resting offer above us thinning out a little bit. Maybe some was absorbed here. And I've got just over 5 minutes left on the stream, folks. So if you have any questions, any feedback, anything you'd like to share, feel free in the YouTube or the Discord chat. If you're on the Discord, just tag me in. But we're getting closer to that level. I'd really like to see a push above 4380. I'd like to see it build some volume there. And then that, I think, would be pretty constructive for longs. On the other side of it, if we get rejected here and we pierce below the opening range lower, which is going to be just around this level. Let's just make it neat and clean, call it pierce below 4370, would have me wanting to take shorts. A move above 4380 would have me wanting to take longs on either move. I'd be looking for volume to build to kind of show us there's acceptance at that level. Let's take a look around the market before we close out the stream. We've got the NASDAQ chopping around. It has not made a new post-open high yet, unlike the S&P. So it's not giving us the same level of conviction. Let's see if it can do it in the next several minutes here. We've got bond or notes here, the 10-year note futures getting a little bit of a bid off the low, not too long after you had that huge iceberg order. That's one of the reasons it's always worth looking at these, because if you're a short and you see someone coming in that kind of size, you're probably going to get a little bit less determined to push price lower. You might even want to cover a bit. And then in crude, it's just kind of flat. It's starting to move down here. It built some volume here. Now it's starting to see, looks like the acceptance for this move lower. You can see the point of control has been consistently dragged lower. That's bearish for crude. So crude's looking weak. It looks like there could be some continuation to that downside. If there's any amelioration of geopolitical tensions, that'll pull crude lower as well. So just worth watching this one here, because this might help to give a bid to the non-energy parts of the market. It may also help to put a bit of a bid into rates, as we're starting to see they're coming lower as price is pushing higher on the ZN contract. And coming back to S&P, we are starting to just see more resistance here. This level is key. We can see the market's telling us the same thing that we talked about before we even explored this level, that this is going to be an important line in the sand. Let's go over to the tech-laden NASDAQ. Just really, it's trying to make that new post-open high, but not with any real determination. But what I like about this chart is we've made at least this higher high from here, this higher low. So we've got that pattern, we've got another higher low. Now we need to make that higher high. That's the last thing I really want to see to tell me that buyers are in control, but they are above the point of control. They are above VWAP. That's at least looking constructive. So we're going to really key off the S&P today, because it seems to be, for once, actually giving us a little bit more clarity on price. We also see, this is nice to see this if you're bullish, we see liquidity building above us in the S&P. Look at that. We got that 4402. This is kind of newer, that 385 on the offer. You have offers building up at 43.87, 43.90, 43.93. This is constructive. This is exactly what you want to see. So it does, if trend can push higher, if we can get above that 43.80 level and accept there, it does tell us that there's offers that are wanting to distribute at those higher prices. And in an illiquid market like we are today, the auction is going to seek liquidity where it can. Okay, so if we push higher, it's very likely to get pulled into those levels like magnets. So I've got just over 2 minutes left here. I want to thank everyone for tuning into the stream. Feel free to hit the like button. Check out my feed on Twitter. Check out my YouTube channel and the work that I do at Traderade and Macrovisor. I'm back here on Bookmap every Tuesday at 9 a.m. Eastern. So I will be back next week, and we'll talk more about what's going on. There'll be a lot to digest. I think it'll be a lot of fun to review kind of what's happened going into that week, and that'll be an options expiration week. So you've got all kinds of interesting cross currents going into that. Yeah, thank you. Thank you for tuning in. Really appreciate it. Love to share what I'm seeing, and hope it helps you all make better trades, and also just learn a little bit more about other people's trading styles. Again, there's no perfect style. There's no one size fits all system. The biggest thing about trading is learning about yourself and what works for you. Because once you start to get that in gear, you can have a better sense as to how you can trade with discipline to reach greater consistency and become a more successful trader. We're starting to push above 43.80 here. This is that level. It always seems to happen as the stream's ending that we start to see some kind of decision. I've noticed this is a theme. I wonder if I should ask for an extra 20 or 30 minutes. But anyway, let's see if we can push above here and build acceptance. If we can, it's going to look like a pretty constructive day for buyers. That's exactly what I was looking for. It's part of our game plan. That's going to be our key pivot. Let's watch for acceptance above 43.80 and a build of volume pulling the point of control higher. That'll be a nice entry signal to push this market up into a trend day. So hope everyone enjoyed this stream. We do have that 20-minute and 30-minute opening range breakout starting to happen. 30-minute, maybe a little early to say, but 20-minute opening range definitely breaking out of that, and looking much more constructive here. Just looking for some volume to build, but I think it's a good place to at least start to take some starter longs into this move. So thank you everyone for tuning in. I really appreciate the support. I hope to see you next week. And again, if you have any questions for me, feel free to reach out. You can always reach me on Twitter or on my YouTube, or by leaving a comment in the Bookmap stream video. I'll be checking out on the video later and seeing if anyone left any comments. And finally, and look at this, we're getting the breakout. Look, right as the stream's set to end, we're getting the breakout. It happens every time. So thanks everyone. Really, really appreciate you all tuning in. I'll catch you next.